Hello again, everybody. It's Harry Boxer, the Technical Trader, and it is Tuesday night, February the 1st. The stocks today that we're going to discuss are on the short side, Boxer Shorts list, and it'll be a selection of stocks. We can't go over the entire list, don't have time's not permitting, but I wanted to show you some of the stocks that, despite today's big day in the market, did not act that great and continue to be weak. Starting off with Silicon Israel. Now, after a beautiful run-up and a topping pattern, it came down hard, ran back to resistance, rolled over hard, and we have 1, 2, 3 legs down. I'm looking for a fourth leg, then a fifth leg to roll it over. But right now we're bouncing off support in the 29.5 area that was reached yesterday. Resistance around 30 3/4, just above us here, and perhaps even as high as 31.5. So, but eventually I'm looking for a rollover that takes us down towards the 27 range, maybe as low as 24.5. CPLA, despite being up a buck today, did so on light volume. Technicals are not responding. You can see the bear flag that's formed here. Let's scroll in on it. Big gap down, got to support and bounced, and very weakly, I might add, with very poor response in the technicals. At some point, this appears that it could roll over, and we'll be keeping close tabs on that. The big channel to the downside says that this stock could be in the low 40s at some point, but first stop, if it breaks down below 51, could get us into the 46.7 zone. CRE. CRE was up $1.17 today. First decent snapback session, but look how poorly the technicals have responded so far. It's come down quite a bit from 70 down to the 50 range. So at some point we need to get some kind of snapback. But watch for a move back up if the market continues for a couple of days, gets us back up towards 54, 55 zone. If it does so in light volume with poor response and technicals continuing, I would look for something to roll over into the mid to high 40s. CTRP, snapback $1.05 today. Still, again, poor response to the technicals. I'm not excited about the way this looks, and certainly with the break of that line, with the big down day 2 days ago. So far, what we have is a snapback to resistance in this zone. Maximum 43.5 is what I want to see ideally. This is the down channel and top of the down channel, and a rollover here could take us down towards 37.5, and then as low to mid 30s. Dolby DLB did snap back from new lows set today at 58.39 and reversed a couple of points to close up 57 cents from being down $1.50 earlier in the day. That was a new 4-month low, and so no surprise it did get a reversal. There was some decent volume on it, but the technicals sure didn't look like they were reversing anytime soon, and the resistance right now lies around the 62.5-3 zone. That's what we'll look for if it does snap back as resistance for the overhead. Now DORM, Norman, which we recommended a couple weeks ago up in the 37.8 zone, came all the way down to yesterday's low at 29.26. So no surprise that it reversed to 32 yesterday and 34 today. Resistance at around 35, maybe more than a stock can handle, but we'll see. There were some decent volume in a reversal day yesterday. I'm not seeing any real response in the underlying technicals to this snapback, and right now we're at the declining tops line. So keep an eye on whether or not this does break out to the upside. Always the possibility we see it move up to test the moving averages up around 37.8 before it does roll over, but not looking for that right now. EVR, Evercore Partners, rolled over and took out key support when it broke this line here. Been bounced yesterday, but today in an up market down 49 cents, not good relative strength at all, and indicative of potentially lower levels. First stop 29.925, second stop 26. FFIV also up, even though it was up $1.58, 1.5% today. I'm not seeing any real response in the technicals. Volume was rather low. Not looking for too much. Perhaps a snapback to the trend channel could take it as high as 119-ish, but that's 10 points from here, and I'm not looking for that either. Perhaps something around 112, 14 max, and we'll keep an eye on that one. GSIC also down 43 cents today in an up market. Rather poor money stream imbalance of power, and it looks like it's about to roll over. Below 22, the stock could accelerate lower. There is some support around 21, though. We'll see what happens at that point. But if it does take that out, bottom of the channel down around 18.5, maybe as low as 17, that move could take place. Hawkins Chemicals broke hard 4 days ago. bounced, and then the last couple of days it slid back. Off 4 cents today, an increasing volume, not a good sign, and perhaps, particularly in an up market, we'll look for a retest of this 36 level. If that's taken out, a move down to test 33.5, 34, and then even 30 may take place. HXM broke hard in the last few days, stabilized yesterday, and bounced back 87 cents today. Not particularly impressed. Key over resistance around 32.5 is a place where you may want to consider on the short side. Don't know what's going on with Life Partners LPHI, but it's fallen apart. The stock has fallen dramatically from almost 19 down to under 10 just in the last 5-6 weeks. Particularly sharp slide from 15 down to 966 just in the last 4, 5 sessions, 6 sessions or so. Perhaps oversold down here. Look for a snapback that takes it up towards 11.5, but I'd consider getting short up in that zone, provided the volume wasn't strong. McDonald's. Down 20 cents in an up market today, a laggard in the Dow, and potentially stock that wants to go lower. You can see that the topping pattern was taken out with this down move in January. It did snap back to resistance at the declining tops line and moving averages, but it's rolled over subsequently. A move through the 71 zone could take this down dramatically into the mid 60s, maybe 66 range. Neogen, which broke its channel from the bear flag, came down hard and bounced. Was up $1.16 today, but only on 87,000 shares. And it sure looks like a new down channel may be in force. At this point, we'll keep an eye on that line and this line as a potential new down channel underway. SKX been ugly for months now, having dropped from the mid-40s down to the high teens, and yet unable to bounce or rally. Technicals very poor here. If it does take this line out with any kind of real conviction and volume, then that's a key breakout, and you could see it running back up towards the 23, 3/4, 24 zone. But we'll be watching volume and technicals on this one, as if it doesn't get going soon, it could roll over, take out 19, and run into the mid to high teens, about 15 and 16. SMSC up 43 cents today, not impressively. Well, technicals are going nowhere. The stock broke down below out of the bear flag and now snapping back perhaps, and it's a bit oversold, having dropped from over 30 to under 24 very quickly, but look for a move back up towards the 25.5 area up here, which could, if it's on low volume, be an excellent shorting zone. STRA down 60 cents today. This stock has been bear wedging for about 3 weeks now. Ugly technicals, ugly chart. A move down to 100 or 98 in that zone would not surprise me, and maybe very quickly. Sensient, SXT, which rolled over and broke the uptrend in early January and snapped back to resistance and failed, then rolled over and right at key support here. Up 26 cents today, less than 1%. The stock has some heavy resistance at around 35.5, 3/4. That would be a pretty good potential entry point for a short. At this point, the down channel that may be being formed looks like that, with a downside target around 32, secondary target at 30. Thoratech, really ugly pattern, ugly chart, and has been for 6 months, having run from high 40s down to the low 20s, and yet making new lows here, looking pretty ugly, and I wouldn't be surprised to see a test of 20 come very soon. Tata Motors, TTM, finally bounced a little bit today after reaching as low as 23.35. We spotted this one in December at around the 31 level. It's come down quite a bit, and the declining channel looks like that. Kind of a major falling wedge. It's had a pretty big fall. I would look for potentially a snapback up towards the high 20s, but that may be an opportunity to short, particularly if it settles in up around the 29 area, 28, 29 zone, something like that right now is resistance. And it's going to be difficult for this stock to make a lot of headway above 26.5, 27. And lastly, today's VMware, which had a big run up over the last year or two from the low 20s to over in the mid 90s. That's a huge move. Even though it did have a break in October, it reactivated itself and made new highs before finally rolling over again. A little bear flag is formed in here. Today's gain of $1.19 came on fairly low volume with very little bouncing technicals. Is this a bear flag? We'll soon see. You can stop it above the 87.5 zone there, about 88 area. But if it does fail and roll over here, we can see a quick slide down towards the 79.80 zone and then secondary target around 72. And that's it for tonight. A review of the box of shorts. There are still quite a few longs that are looking good here, but we don't have time for that tonight. Tomorrow we'll get back on the long side and check out what's going on, provided the market doesn't suddenly break hard for some reason tomorrow. Good evening.